Hello, good morning and welcome to the New Starter edition of News Express, proudly brought to you by Business AM, Nigeria's fastest growing financial and business newspaper. Let's get right into the headlines for the week. Top in the front page this morning, we have this headline: Economic bilateral ties top agenda. Osinbajo proposed visit to Vietnam. We have bullet points right under. Africa lacking among countries' trading partners. Opportunities beckon for Nigeria's economy, businesses. Now, this one is going to be the top of our radar in my conversation with the publisher Business AM. But just before I bring him in, let's check out other headlines now. Below that one, we have relax, don't worry. Debt risks moderate, ratios under control. Is this one really under control? Now, we have analysts telling Nigerians and investors to relax. A bullet point right under this one, but project debt to GDP ratio of 35.5% for 2021. So why should we relax? Moving into the summary section now, a couple of headlines there. Trade deficit worsens to 3.94 trillion naira. That's on page 3. Tight June, call for NGX equities. We'll get into the market. We'll have a lot of time, but you can catch that one on page 11 of Business AM. In the energy, power and renewable section, we have Nigeria to sell idle power. That one's on page 22. And finally, the commodities and agri section, we have Nigeria absent in cotton trade. There are lots of other headlines here, but all right, so let's bring in Mr. Philip Isakwa. He's a publisher, Business AM, Nigeria's fastest growing financial and business newspaper. Good morning, Mr. Philip. It's good to have you here. How was your weekend?
Good morning, Rachel. Weekend was good. I hope yours was good too.
It was fantastic.
Fantastic.
All right, let's get right into it. Now, the very first headline in the paper: Economic bilateral ties top agenda in Osinbajo proposed visit to Vietnam. Now, Nigeria is clearly bigger than Vietnam in terms of GDP size at over $470 billion. But the Asian nation is, far healthier than the African top oil producer. We have a forecast by PwC. That's in February 2017. They are saying that Vietnam may be the fastest growing of the world's economies with a potential annual GDP growth rate of about 5.1%, which would make its economy the 20th largest in the world by 2050, Mr. Philip. With all of this, what opportunities can our country get, economy and business-wise?
Now, this was an exclusive that we got last week, and we decided to dive straight into it and make it, because we think it's a big story. Now, what is going on, Rachel? Recall that across Southeast Asia, let's start from China. China is a producer to the world, So you have Vietnam, and then I think Singapore also produces for the world, in terms of some manufacturing that takes place in those countries. Vietnam is one of those countries, in spite of what they have been through, that they produce a lot of, they manufacture a lot of goods for big companies. I think some of them, you have perhaps a Nike in Vietnam and many others like that. Now, if you want to do a comparison, you would now come back to Nigeria and think about what we probably aren't doing right. So you take a place like Aba, given the history of what we know of Aba in Abia State, where manufacturing is done, but for many decades, we've always talked about that area as a small-scale manufacturing empire or dynasty,
right.
But nothing has really been achieved in terms of upscaling it, I've spoken to a lot of analysts in the past, who have said to me, if I was in charge of maybe one of these big economic ministries, talk about maybe the Ministry of Industry, I will move. I've spoken to people who have said they will move their office to Aba, and try to see how that place is developed, in the same form as you talk about Vietnam, you talk about China as manufacturing hubs, So it hasn't been given that kind of attention, But so there are lessons to learn from this proposed visits, to Vietnam. Perhaps perhaps it should be seen more in terms of its economic, in terms of its economics than more of a diplomatic visit, because if you recall that if you were to look at maybe the United Kingdom, or you look at what's called the United States, when they are visiting some of these big, some of these economic countries, they go with a lot of they go with a lot of their private sector people, so that deals can be made, So we will expect that when the Vice President visits Vietnam later on in the year, that visit should have a lot of also to have many members of the private sector. It's good a thing that we have what's it called an association, a chamber of commerce, Nigeria Vietnam Chamber of Commerce. We expect that they will be highly involved, that they will be able to mobilize their members, and then that the presidency will be able to mobilize other private sector participants, so that they can go to Vietnam, learn so many things from what they are doing in that country, and then to see what can be replicated back home. So there's a lot of manufacturing going on there. There might be some deals to be struck in terms of company-to-company relationships, that if they take a lot of private sector people, that they'll be able to do, So that's the reason why we think that story is important. There's a lot of lessons to be learned from the Southeast Asian country.
All right, let's move on to the second story in the cover page of the paper now. In the first quarter of this year, we saw the country's debt rising by 191 billion naira to 33.1 trillion naira, and the portfolio stood at 32.9 trillion naira in the final 3 months of 2020. Now, according to the recent report from the Debt Management Office, analysts are saying that we should relax, and it remains under control. How is that with these worrying numbers that we have?
Yes, if you look at it, Rachel, if you look at what's going on in the political scene, you will especially reactions coming from maybe both some analysts, but again the political opposition who continuously would talk about the debt situation. Of course, many people are worried, because you keep hearing the debt profile rising on a regular basis, and this became quite worrisome when the president sent in a bill or a proposal, for the National Assembly to approve another, I think, $6 billion, for new debts to be taken this year, and then people began to look at the numbers and began to really worry, that Nigeria was piling up debts. Of course, it is worrying, because if you look at the history where we are coming from, once there was a time when we had a debt situation. I think it was $28 billion in debt, some decades ago, and we had that worked out, especially the Parity Club angle of the debt, worked out when Dr. Ngozi Okonjo-Iweala was Minister of Finance and was supervisor of the economy or something like that, and during the Obasanjo regime, they were able to bring that down in terms with the agreement that they reached with the Paris Club, and there was a lot of relief, because for a very long time this was a big problem. Now you're having a situation where debts are piling up, and people are beginning to complain that this is worrisome, and but we spoke to some analysts, who looked at the numbers and were saying that it's true that the debt situation is becoming worrisome, but it is when you look at it in terms of the risks associated with it, that it is not something that they should worry, because the risks are moderate. They are not so alarming that they could kill the country as of today, and that they said, okay, debt to GDP ratios are not bad at the moment because it is still within the threshold, especially if you also want to compare it with with other nations. For instance, the DMO threshold of alarm will be a debt to GDP ratio of 40%, but at the moment we are looking at a debt to GDP ratio that is not near that because I think the debt to GDP ratio is something in the neighborhood of 20 something percent, and they say no, that this is still within the threshold, that if you were to compare it with some other countries, that for instance, there's a country, I think it's in South Africa or Kenya, where GDP ratio is 58%, and that so if you were to balance it up, so currently Nigeria's debt level is just 21.7%. Not so I was right saying 22%. So 21.7% of GDP. So for policymakers, there's comfort here. And this comfort allows them, because we're looking at a threshold of say where alarm you can begin to sound alarm will be 40%, then 21%, 21.7% allows some room, for some movement, So you look at it, the sub-Saharan African level of 58%. This is 22% lower than that. So the sub-Saharan African level is 58%. And so you still have some room there, but they're also projecting anyway that by the end of 2021, we might have a debt to GDP ratio of 35.5%. Again, that will bring us very, very close to 40%. So what should we be doing? Quite a lot of things are playing out there, a vulnerable economy to external shocks, a government's inability to effectively diversify the revenue base, a frail economic recovery, which raises concerns over fiscal sustainability and low debt to GDP ratio of 23%, which remains significantly below the sub-Saharan level. So there are so many things there playing out there, that should provide some form of concern, But analysts who have looked at the numbers, the raw figures, are saying that we should relax. The risks are moderate. The risks are moderate. The ratios are within manageability. Manageable levels. That given that situation, it just needs government to be cautious of what they are doing, so manage the economy very well, because the debts are increasing, we're incurring more debts because there isn't quite enough of earnings, to deal with a lot of things,
Right.
But things are balancing out in terms of oil prices rising, and then maybe with more earnings, things could be better.
We hope so, Mr. Philip. Now, it's public holiday today. The markets are closed. We're hoping it will resume tomorrow. What are analysts expecting this week to be like?
Well, we have looked at this. Last week was we saw. Okay, if we are looking, let's look at the capital market, for instance. Bargain hunting, last week, helped the stock exchange, to sustain a bullish run. Analysts see a strong appetite favoring the bulls this week again. So the analysts believe that once today's holiday is over and markets resume tomorrow, we'll see a lot of profit taking activities, likely to be up there following the week's performance. Last week's performance. So if they're going to take profit, so you expect that the bulls will be in action again, and basically that's what they're saying. Given what we saw in terms of activities last week, so they say it's going to be bullish, and that we expect that the market will be active, very active this week. If you want to look at the money market again, we looked at it. Naira lost its street cred last week. It's still trading above 500 naira to the dollar. That's not palatable. A lot of people across different markets in London, in New York, especially Nigerians who are closely watching the situation. You hear a lot of sadness in terms of what's going on, especially when people want to send money home and they are not going through those the proper channel. They're going through the what I call below the channels. They're having to cough out a lot of to get naira. And especially those who are also involved in the trading. So they say analysts are saying anticipate naira to gain strength this week. Where that's going to come from, we'll watch and see. I expect activities levels across the different segments of the market to improve, especially with improved liquidity across the fixed income space. So that as far as we know, that's the expectation from the what's it called, the fixed income market as well as the capital market this week.
All right, we'll just see how trading goes this week. Thank you so much, Mr. Philip, for joining me this morning. All right, and that was Philip Isakwa. He's the publisher Business AM, Nigeria's fastest growing financial and business newspaper.